I'll switch to web.
That's fast today.
Hey,
Sending.
fix all the issues.
No. There you go. When rates go up, prices will drop it like it's hot, drop it like it's hot, right? Everyone's been waiting to see, when are prices coming down? What does it look like if prices come down? But we know this, rates have to rise for prices to come down. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to inform you on what's a mortgage. If it's your first time tuning in, do me a huge favor. Hit the subscribe and notification button so you're notified every time we go live or post new content. We go live every Monday night at 9 p.m. on Facebook and YouTube, and we post content daily on Facebook and Instagram. So if you're not following us on Facebook and Instagram, definitely follow me. Guys, let's get into it, right? So everyone keeps talking about prices can't move at this rate forever. I completely agree with you. Prices can't move at this rate forever. But what's going to cause prices to come down, right? Will it be unemployment? Unemployment's back at 5.8%. Will it be forbearance and foreclosures? Right? Forbearance is down 4.6%. Okay, a little bit over 2 million homes or homeowners are left in mortgage forbearance, and they're slowly getting out of that. You can look it up on Mortgage Bankers Associate, right? MBA.org. It will tell you all of that. So if unemployment's down, going back down, and forbearance is coming off, and people aren't going to foreclosures, not saying that people aren't going to from forbearance, but it's getting less and less and less. The market isn't going to be flooded with all these properties. Are we building new properties? We're doing our best to build new homes, but they're just not building it fast enough. The one way prices, I feel, will come down is when interest rates go up. And I feel that interest rates have to climb. The Fed can only hold down inflation for only so much. If they can't hold down inflation anymore, prices will rise, right? Inflation is going to push monthly mortgage payments to go up. Remember that. Inflation will push monthly mortgage payments to go up. So when they push monthly mortgage payments to go up, guess what? Eventually, everyone who can afford a payment, right, slowly as payments go up, they can't afford that payment anymore, which will slow down demand, which will bring down prices. Hopefully you understood that. I wish someone in high school would have taught me that, right? So now we know how prices will come down. With inflation driving up mortgage payments, there will be a time when everyone can't afford anymore. And when they can't, it will bring down prices, right? But remember, no one tells you this either. Look at the monthly mortgage payments. They will continually rise. Doesn't matter if prices go up or down, monthly payments for initial home buyers will continually rise. So definitely pay attention to that as you're out there watching the market. I would buy Shelby if it's a long-term investment, right? We'll answer more questions near the end. But let's get into it, okay? So what happens, right? No one ever asks, what does payments look like if prices drop 10% to 20%? What will it look like to you? For all of those sitting on the fence, what will it look like to you? Remember this too, the difference between now and 2007, 2008, in 2007, 2008, loans were adjusting and people couldn't afford them. When they couldn't afford them and they had to go into foreclosure, right? Then other people start foreclosing. Why is that? So let's say you got a loan back in 2007, 2008, right? To get the cheapest payment, you got a 2-year fix or a 3-year fix or a 5-year fix, right? You probably had to go stated and go interest only, which means you didn't pay principal. So when your loan adjusts and there's no more value, guess what? You will owe more than your house is worth, and you can't refinance, and now you can't afford that adjustable payment, which caused the collapse of the industry. There was negligence, right, and on behalf of the real estate agents and loan officers, and there was negligence on the behalf of the consumers from thinking it's too good to be true. You're driving a Ferrari for a price of a Toyota. Eventually, you got to question, why is that, right? So the market crashed in 07, 08. People owed more than the home is worth because you can only play the Ponzi game for so long. You can't keep bringing up monthly, you can't keep bringing up loan amounts, right? And robbing Paul to pay Peter for so long when you just can't afford that payment anymore. And when you can't and your loan adjusts, it causes the domino effect. In today's market, majority of people have 30-year fixes. So if prices dip, guess what? People don't need to let go of their house. If you are upside down for a season, right? The bank can't come and foreclose on you because if you owe more than the house is worth. If you're on a 30-year fix, as long as you're making your mortgage payment, right, you're fine. If you have a conventional loan and you pay down 20 or 22% of the original balance, the PMI will still come off in a declining market. Okay, so for prices to come down, right, monthly payments will have to rise. So rates will rise, which will bring down demand. All that makes sense? So what happens in the next couple months? Let's get into it, right? So let's look at here. So here is a rule I want you guys to pay attention to. For every 5% the market dips, rates go up 0.5%. So if the market dips 10%, rates will go up 1%. If the market dips 20%, rates will go up 2%. So as you're watching, right, and you're watching the prices go down, if they do go down, I'm not saying that they will, right? As rates are climbing right now, people are still overbidding and there's still a bidding war. So we'll see when that ends, okay? So if prices dip, let's see what happens. So remember that historically, if you see prices dip 10%, right, 1% in interest rate, 20%, 2% interest rate, okay? So when market does dip, also pay attention to this. Next slide. Down payments will increase, okay? A lot of lenders, it did happen in 07, 08. If you didn't witness the 07, 08 crash, talk to anybody. When prices started decreasing at a high velocity, right? If it dipped 10 to 20%, they will change down payments, right? They will change down payments. So remember, if prices dip 10 or 20%, they will change down payments. I got to change slides, Andy. I got to flip it. You got to change it to the other side. No, but you got to change it on the monitor. There you go. 20% down. I know 20, sorry. Down payments will increase. Monthly PMI rates will go up, or there'll be no PMI at all. Well, you're just saying that because you're trying to force us to believe something that might not happen. I witnessed the 07, 08 crash. 5% down turned to 10% down, right? And some lenders wouldn't even do less than 20% down. Why? Because private mortgage insurance were going out of business. If you're a private mortgage insurance company, why would you insure a loan that's more than the value of the home, right? So that's why if the market does dip, for everyone's like, oh, I'm waiting, you're going to have to increase your down payment. So if you don't have a big down payment, you might not be able to get in a house with 3% down, 3.5% down, 5% down, or 10% down, right? Also, down payment assistance will go away. Why would you loan more than the house is worth? And if you are able to get PMI, trust me, monthly PMI rates will go up. FHA PMI rates went up, and so did conventional after 2007, 2008. Or there were some companies, there was no PMI at all, which means you have to put 20% down, right? Of course, if you put 20% down, is there other cash offers you might compete with? Yes. If you go 20% down, can you get a house? Most likely you can, but we'll see, right? But what does it really look like? And I think everyone is sitting there waiting on their bum, just waiting to see. I'll answer your question in a second, Don. What's going on, Erica? Right? What will it look like? If you knew what it looked like, it should tell you right there what you need to do or what you should do. Let's look at the right now scenario today, right? Right now today. Next slide. Right now today. Okay, let's look at it really quick here. On a purchase price of $500,000, down payment is $25,000. That means your loan amount is $475,000. Closing cost is $10,000. Rates today 3.125, APR 2.93. The monthly principal and interest payment is $2,034. Property tax $520, right? Mortgage insurance, hazard insurance is 5% down. Your total mortgage payment is $2,792 if you buy a $500,000 home right now, 5% down, right? Look at total principal, $475, interest $257.22. In 30 years, you would pay a total of $732,522. That's today's market, okay? I want you guys to remember the scenario. I do apologize I didn't do it. I didn't put all the scenarios on one page because I think the writing would be too small. But that's our scenario right now if you buy, right? 740 credit score, 5% down, PMI 0.44 at a $500,000 purchase. Remember, $2,792 and 732. Just keep it here, Andy, and I'll move the slides around.
Okay.
Okay, so let's look at prices dipping 10%. Boom. 740 credit score, 450 loan amount, right? Purchase price, because the price dipped 10%. Look at 5% down. If they do allow 5% down, look at the down payment, $2,250. At 500, it was $2,500. So your down payment changed $2,500. Your loan amount is 427. Closing cost is $9,000. Remember, rates went up to 4.125. PMI went from 0.44 to 0.55. It's a little bit higher than that, which I've talked to a lot of people on, but I just went conservative because I don't want trollers out there. Oh, you're juicing the numbers to make it look bad. I'm not juicing the numbers, fam, right? Your total payment, $2,789, right? So you waited prices to drop 10%, and you want to compare $2,789 to $2,792 right here, right? $2,792, $2,789, right? Your total month, 30 years, your total you're going to pay, right? $745, $876. $732, $522 on right now scenario instead of waiting. That's 5% down, right? That's 5% down. You are going to pay more when rates go up and prices dropped 10%. So for some of you who are sitting there waiting for Jesus to come back or waiting for the apocalypse or the second coming or whatever you're waiting for, if you're going to wait, sit there and run the numbers. Don't sit there and assume when 10% goes, when the prices drop 10%, it's going to be better for you. It's going to be Gucci or gravy, right? Let's go back here again. Let's look at this one. Let's look at 10% down, right? Look at 10% down. So let's say these banks now want a 10% increase, right? $450 purchase price. Your down payment is not $22,500. It's not $25,000. It's $45,000. Loan amount $405, right? Total payment $2,657. $2,657 compared to $2,792. Not too big of a difference. It's like about 100 something bucks, right? But remember, it's $100 something difference in payment. But you came in with 45 grand instead of 25 grand. Think about if you would have put an extra 20 grand on your 5% down in right now's market, right? Your payment would probably be cheaper. Look at this. Look at this. In 30 years, you're going to pay $706,000 total. But remember, you came $45,000 instead of $25,000 out of pocket. And that's 10% down. I see the 10% now happening more than the 5% because I witnessed the crash in 07, 08. And when that happened, most lenders require higher down payments. Talk to anyone who's a lender and a realtor. The reason why they require higher down payments because if the property goes negative, right? Because prices are coming down. So if you are those who are riding that way, prices will come down. You got to take the pros with the con. Prices might come down, but they're going to be higher risk to the banks. They require more expensive PMI or bigger down payments, right? But no one looks at that. Run the numbers. Guys, don't sit there waiting. I'm going to wait till 10% down. If you wait, you're going to pay more, right? But let's battle it out right now. Let's battle with whoa, you know what? I'm going to wait for prices to drop 20%. Let's go back to the original really quick here. $500,000, $25,000 out of pocket, $475, $27.92, and $732,000, right? Let's go here, right? Prices drop, so payments do look better here, okay? 20% down, like not 20, sorry, 740 credit score, prices 400. It dropped 20%. Purchase price 400, but remember, if prices drop 20%, I bet you anything, fam, unless you're going to FHA, which they'll increase the down payment as well. If you go conventional, right, 10% down. There's going to be no more. If prices dip 20%, I promise you, fam, there will not be a 5% down, 20% down. So you're coming out of pocket 40 grand. So prices drop 20%. You got to come out of pocket, 10% down, 40 grand. So you have the money, good for you, right? Rates 5 1/8. Payments 2607. 2607, right? Right there, 2607, right? Compared to 2792, right? You see this here really quick. 2607. 2607 minus 792. Let's say 2792 minus 2607. 185 bucks. But remember, you came out of pocket with an extra 20 grand, right? So just think about that. Yeah, if prices do dip 20%, you'll have a higher chance, right? So you would have to wait for prices to dip 20%. But if prices dip, you might have investors buying it, right? Like I said, there's not going to be a bunch of homes flooding the market, right? But if prices do drop, that's what you're going to see, okay? So, but remember, I'm going to go back to the other one here, right? So remember, 705, right? 705. So you're saving what? 705, 32, 705, wait, 705, 705, 655 minus 732, 522. So it's 26 grand. So you save 26 grand, but remember, you're coming out of pocket 40 grand and not 25 grand, right? So it's only a $15,000 save, but you're waiting for prices to drop 20% down, or 20% to put 10% down. But imagine now, on a $400,000 purchase, you have to go 20% down. What happens if you have to go 20% down? That's 80 grand. Who here sitting on 80 grand? I know some of you guys are, but a lot of you guys are not. So this is what this is what you wish for, right? You want prices to come down. You got to come out of pocket, 20% down, 80 grand, 5 and an 8 to make your payment 2209. 2209. Yes, your payment is going to be cheaper, right? Almost by what? 600 almost 600 bucks with this 20% down, but remember, or with the 20% dip. But remember, you came out of pocket 80 grand, right? 80 grand. So 80 grand minus 25 grand, you came out of pocket $55,000 more, right? Think about if you would have bought now and you put that 55,000. I'm sure your payment would be almost the same because you probably wouldn't have PMI either, right? With that 5% down. But that's what it looks like, guys. So some of you who are waiting for prices to drop, yeah, if you got 20% down and you're going to come out of pocket more, but your payment will be cheaper. But if you have that type of money, you can buy right now and it's the same thing. If you're sitting on the fence waiting for something to happen, even if it does, you're not in a great position that you're waiting on. I don't think anyone talks about that, right? It's easy to say, well, price is going to drop. I'm going to get a good deal. Name me 5 people that you know that took advantage of the 07-08 crash. Probably not a lot of people. There are a handful, but the market got bought up by investors. So you have to understand, in a declining market, you're also competing with investors, right? So before you get off the fence, right? You know, before you get off and go, you know what? I'm not going to buy. I'm going to wait for prices to drop. Run the payments. You might spend more than you think. It might not be worth waiting, right? And I'm telling you, talk to any lender, any realtor. They'll tell you, in a declining market, rates will go up. In a declining market, PMI companies will go up. In a declining market, they'll require a bigger down payment, all right? Hopefully that helps you out. If you want to see payment differences and you want to see should you buy now or not, give us a call. 714-790-9697. Hopefully that helps you out, right? Hopefully now it helps you make a decision. Should you get off the fence or is there time to save? Of course, if you're not in a position to buy, do not buy. If you're in a position to buy, buy. Get off the fence. If you're not in a position to buy and the area that you want to buy in is continually growing and it gets more and more expensive, when it's time for you to buy, you might have to live somewhere else. Cost of living and housing and to live, right? Living and housing will continually rise. Can you save enough to beat inflation or appreciation in the area you want to buy, right? You got to ask yourself that question. Because if you are, then buy, then don't buy. But if you're saving and no matter how much you save, you can't keep up with the Joneses, you might need to change where you're going to buy. And not just keeping it 100, right? If I felt like if I didn't buy in 2020, like I did last year, I probably couldn't afford anything now, right? I live in a condo compared to this house, like there's a house four houses down from mine. Sold for 1.4. My condo I bought for 780. I'm getting offers at 850 for it. I did the math. My payment would be insane if I didn't buy. And the place where I rented, I was paying $3,300 a month for rent. is at 35 and some change now, right? So definitely, guys, think about, they didn't raise rent for a while. That's the reason when the new tenants, when I left, they finally raised rent on the new tenants, right? So definitely, guys, if you're not in a position to buy, do not buy. But you need to think about, where can I move then? If I am going to buy 2, 3 years, 5 years down the road, where am I going to move? But if you're going to buy where you live right now, you're renting, how fast can you save? If you can't save fast, make some sacrifices. Get a roommate, move in with your folks, do something to move forward, right? You want to move forward and not backwards. You want to make sure you focus your energy on knowing what's a mortgage. All right, guys, let's go some Q&A here. What up, Anthony? How you doing, Freddie? If it goes down that much, then it would be even harder to buy because more people would be able to afford. Freddie, you are a genius, by the way. Can we give it up for Freddie really quick here? Freddie, you are a genius. I wish more people actually thought that way. Also, in a declining market, if it declines that much, people are losing jobs. Guess what? The person who's waiting to buy that house probably gonna lose their job too, right? Make sure if something like that happens, right, you can get forbearance. Something like that happens, your payment is cheaper than rent. All right, hopefully that helps you out there. Shelby, should I buy now or wait? If it's a long-term investment, you're gonna keep it for 5 to 7 years, buy now. Don Copeland, sir, when or if I buy a house, would it be like buy my land too if I still owe? Sir, when or if I buy a house, I would like to buy my land too. Will I still owe taxes? Even if you buy your land, you have to pay tax on that land you buy. Hopefully it's not a mobile home. If it's a manufactured home or single family home, when you buy the house, you buy the land. You still have to pay property taxes. You cannot buy the land and not pay property taxes, right? Hopefully that helps you out. What up, Erica? What up?
Taxes include the land and the
Buy my land too. Will I still owe? Yes, you will owe taxes. Erica, what's going on? Roshan, what's going on? Paul, Luis Aguilar, what's going on? Oh, Erica, this is exactly what we're doing. That's right, Jolene. What up? Hi, Dad. How you doing? Paul, what's going on? Sam, taking money out of my retirement. When should I take out the money when looking for a home? Waiting for documents to get pre-approved, expecting to have all documents in July. Sam, so what I would do is I would talk to a lender, have them start prepping the loan estimate, right? Have them start prepping it so as soon as you get your offer accepted, you submit it to get your money, okay? If you're drawing from a 401k retirement, find out from your 401k, do they wire the money? Some of them are old school, right? They're OG, triple OG, and they're still mailing out checks. And it's really hard to go back a second time to get extra money. So make sure your lender, right, get you a loan estimate and they buffer some extra money in the loan estimate just in case so you don't fall short and go back in and asking for money. If you need help budgeting that, give us a call. I don't know why I love to say that sound. 714-790-9697 or email us info@whatsamortgage.com and we'll help you budget to decide how much you should draw and how to draw correctly without having to go back, right? Some of them take a long time. There are strategies to get that money out earlier, but definitely reach out to us and we'll explain how, okay? What up, Jose? We waited and now we're on a long waiting list and the price is up and the county loan limit is about 100 grand below. Yeah, man. Tell you, Jose, everyone's sitting there waiting. Oh, they're waiting for the second coming. I'm telling you guys right now, look at the U.S. Census Bureau, right? The average American will buy a home at the age of 33, okay? Right now, we have more people recorded ever populated in the greatest number right now between the ages of 26 and 32. So every year, a new herd of home buyers enter the market. There's less people exiting, but more people entering, right? And they just didn't build enough homes. Can they build themselves out of this problem? Instead of building more homes to drive down prices, you know what the government is doing? The government is providing more free money to drive in more buyers. Why would they drive in more buyers, which will cause prices to skyrocket? Men for president, 2024, right? Right? If I was president, right, I wouldn't break off, the way I'd break off everybody is build more houses, drive down prices to make more homes more affordable, right? Instead of giving out more money when what happens, what's the use of giving out more money if housing keeps rising for everybody, for renting and owning, right? Build out apartments, build out homes, drive down price, drive down monthly payments. You won't need more money if you drive down costs, right? 2024, right?
Tax credit, 2024.
Yeah. What's up, Jose? Any word on Helpers Act? It's a bill. It's a bipartisan bill, which means Democrats and Republicans agree. They just need to get signed off, but it's getting close, right? Police officer, fireman, paramedic, EMT, right? Teachers from K to 12 only. Any other occupation outside that, I am sorry, nothing yet. I did reach out. You know what they did? It was like I held on phone. I'm like, man, don't they have an answering machine? I started calling some of the senators or the senators, right? And I called their hotline. Of course, they go through the system because they're trying to raise money. None of that hotline was able to connect to anybody, but I'm still trying so I can find out. All right, Ariana, Favi, what's going on? John, thank you so much. Rick G, I'd rather buy sooner than later, but the house in the area I'm looking at aren't to my liking. Do you recommend I settle for less to capitalize on these rates? Why don't you just keep searching, Rick? Extend your search. But if something pops up where you want to buy, then buy it, right? Extend your search and keep looking. Only you know what you think is best. I can tell you one thing, but every time I sell something, they think I'm selling, right? For me, capitalize. I'm telling you, I didn't plan on buying my condo that I am today. I was going to wait till this year. I'm so glad I didn't. But now I'm building equity, and I feel that I am, I can breathe because I have my house. And as equity goes up and as I make more money, I can make money patiently because I'm making money. And on top of that, inflation and appreciation is pushing up my value. So when I want to get to my next home, right? My next home is going to be in this neighborhood as well. But the next home I want is 1.4, right? So 1.4. We'll see where it sells at later on. But I have time. I'm buying myself time because my cost of housing won't continually rising, right? Because I locked in the cost of housing. So that's what I think, Rick. But you do what's best for you, and I got your back, Rick, all right? Theory of Tao. I've been hearing how everyone keeps saying they will wait and buy later and they will pay down the interest. What would that mean for us if we did wait and pay down the interest? Will we have to pay more at closing costs? Yes. But if you buy down the interest, you're not going to be able to buy down the rate like you think, right? It's not that there's no formula for it because every day where rates are at, you would have, let's say you buy a $500,000 home, right? Let's say rates are at 5%. And you paid 15 grand, let's say like on a $500,000 home, loan amount, right? Rates are at 5 and an 8, 5%. You can't pay 15 grand thinking you're going to get 3%. You might pay 15 grand instead of getting a 5%. You might get 4.5, 4.375, if that, right? So you're not getting some crazy number. That's what I'm trying to tell you, but it will raise it, right? Sam, Tyler's the man. I love Tyler, man. That guy's consistent, persistent. Dude, I vouch for that guy for sure. He deals with a lot of our high-end clients, but I know he's been helping out a lot with What's a Mortgage because we are really busy right now, and Tyler kills it for us, Sam. I like that guy a lot, right? First of all, I don't even like that guy, right? He's tall and in shape. He's the exact person I'm supposed to be, but I'm not. But I still like him, right? So, but Tyler's a solid cat. Anthony, been watching your videos for a year now. Bought for $230 at 3.25. Put 9K down, 4K in assistant. My payment's $1,400. Well, you said fall in love with the payment before you fall in love with the house. My starter home. Awesome, Anthony. Congratulations. Do you do VA? Yes, Jamie. Myself and people who are affiliated with me, we all do VA. Michelle, what's going on? Linda, hi, Min. Do you think prices will drop in San Diego area? Linda, it's like you bought San Diego is the frying pan. It ain't cooling down anytime soon. All right? San Diego's hot. Everything's opening back up. San Diego, you got like everything in San Diego. If you're in such a high-end metropolitan area, it would be hard to see San Diego go down. Too many people. San Diego's more condensed than Orange County. And San Diego, I see it's even moved faster than Orange County right now. James Johnson, I have a 720 FICO. How much is my Chapter 7 from 2007 hurting me? If you had one in 2017, you can buy right now, depending on the month. But you can go conventional, James. You're fine. If it's Chapter 7 was in 2017, you're solid. You're good to go. You can buy with conventional. You can get still good deal. Right now, you get a low 3 right now, but still good deal, James. It's a conventional. Reach out. Mariella Campos, Riverside, even Moreno Valley is expensive. I've been looking for 6 months before I got an offer accepted. It's crazy market. Mariella, let everybody know. Everyone's there. Like a lot of people are sitting there. They listen to their cousins or whoever's telling them not to buy. Most of these people bought their home 10 years ago. If you ask them today, could you afford to buy your home today? with your income today? Most of them will say no. So if you bought 10 years ago and someone told you not to buy, where would you be right now? They're probably paying some gangster rent, right? So don't listen to people who actually went against their own advice. They bought 10, 15 years ago and their mortgage payment's cheap today. And don't listen to anyone who lives at home with their parents and they're saving all this money and they're trying to give you lecture on saving money, right? If they're out there, they only are able to do what they can do because their parents or their aunt bought their home years ago, able to let them live rent free or charge them a couple $100, right? Be careful who you listen to. That's good, but listen to Mariella. I'll tell you that right now. Archie, just curious if there's any lender offering rates for refinance at 20-year fixed. Yes, they do, Archie. It's a smoking deal right now. I need more information, so definitely reach out to me. Reach out 714-790-9697. All right. Reach out. All right. Josh Clap. Clap. I bought 5-bedroom, 3-bath. 3,500 square foot, $650, and now it's selling for $750. Good for you. That's my third house. Josh clap. Let's clap for him. Third house at 33, doing the do. Millennial money. Can a parent quit claim a deed if they're an existing mortgage? Yeah, they can quit claim the deed, but they're still on the loan. You would still have to refinance them off the loan, millennial. Steve, I'm under contract. I don't even know what that means. When I am in escrow, I'm guessing you do jujitsu, Steve. If you're under contract, you are in escrow, brother. All right. Mariella, a realtor said new build homes are also in a bidding war. I see that happening right now too, slowly but surely. Closing this week, got an amazing house and first offer ever. Congrats, Natalie. Israel, how do credit cards affect my credit score? Should I close out credit cards I do not use or open more to increase the credit limit? So, Israel, do not close out any credit cards. Pray to God they don't close you out. Why? Your payment history makes up 35% of your credit. So if you have a long-term payment history and you shut it down, it brings down your credit score, right? Your credit utilization makes up 30% of your credit, which means if you have a high limit, low balance, it helps your score, right? And and then your payment or your history, long-term history of all your credit makes up 15%. Those three right there make up 75% of your credit. So make sure if you don't turn off a credit card because it affects 2 to 3 or all 3 of those, right? So be careful. Do not shut one off, right? New credit makes up 10% of your credit score. So if you go out and get a new credit card, it hurts your credit in the beginning because there's no payment history, right? You just have utilization, right? You don't have history on it. You just have a hard inquiry, which affects your credit for 2 years. So if you do get a credit card, make sure you make payments on time for 4 to 6 months. Then your credit score will start rising. That inquiry won't even affect you at that point. Okay, hopefully that helps you out. Gus, should I buy a first home, 1-bedroom, 2-bedroom for $350, then sell after a few years? I would for sure do 2-bedroom. I wouldn't do 1-bedroom. One bedroom is gonna be hard to sell. 2 bedrooms, you're gonna do it. I would do that. If you can get into a house right now at $350, chill out, wait for the equity grow. All right. Greetings from Imperial. What's up, Carlos? Jan, does single family home rises equity more than condo? It all depends. Condos are a little bit harder to sell. Townhouses, single family homes are easy. Condos are a little bit harder to sell because condos can be permitted one day and not permitted the next day. So that's why sometimes they're good to keep as rentals, but to keep them and then try to flip and sell it, it is kind of hard. All right. Gus, should I buy a home now for $350? I answered that question already. I would buy now. If you can't buy for $500, buy now. Hi, man. So happy with Red Door. Thank you so much, Jolene. Jose, if we come in with 20%, can we finance closing costs or at least half of it? Yes. If you go conventional and you put 20% down, you can finance closing costs. That's the best way right now to get a house in case a house does not come in value. Hopefully that helps you out. All right, Jose. Natalie, what can you do if you have down and not closing costs? Natalie, you can take a higher rate to cover closing costs. If you want to see the payments to take a higher rate to cover closing costs, definitely give us a call. 714-790-9697, right? Definitely right now, it is hard to get your offer accepted. If you have to use your closing cost money to come with the difference, just take a higher rate. After you make 6 payments, you can refinance and drop the rate and drop the payment, all right? So definitely look into that. What's going on? Hey, Danny, Rick G. Can you do more TikTok videos on these haters who hate on people like me, hating on me trying to buy a house? I'll do more hater videos. See, Andy?
No.
Rick likes the hater videos. So many haters out there, man.
We're gonna do it tastefully.
Yeah, we gotta do tastefully. He says, is jumbo loans the only way to go with loan limits in low for conventional? Yes, jumbo is your only way, Jose. Right now, if you're going jumbo and you're above the $1 million loan amount, definitely reach out to Citibank right now. They're still giving like mid twos on jumbo. If you're not jumbo, don't reach out, right? If they're jumbo right there, you know, and that's what I like right now. I kind of made a transition in where I work, so I always tell people what's best for them, even though it doesn't benefit me, because I want you guys to trust what's a mortgage, right? So definitely, I don't work for Citibank, but if you're in the jumbo, go to Citibank right now. They got some smoking deals, all right? Cynthia, just refinanced my mom. My husband and I want to purchase now. Just refinance my mom's house. If you refinance it, your mom's house, if you refinance it in your name, right, and there's something where your parents live in it, and you make all the payments for them, then you can still buy owner occ, right? It's like called a kitty, kind of like a kitty condo, but for your parents. There is a way to do it. Just reach out to me, all right? You can do it right away, Cynthia. Just reach out. Raphael, glad I bought start of the year. Thanks for the motivation. Got a 5-bedroom, 2-bath. Rent out 4 rooms. Look at Raphael with his house hacking skills. Mad props to you, Raphael. Danny, hey man, love your content. Do you have a realtor you recommend? Yes, Danny Wynn. Give us a call, right? 714-790-9697, Danny. And Danny, text me right now, and I will text your name of a realtor. Give me the zip code you like so I can find a realtor that just works your area. What's the main qualifications for conventional loan? They gave me FHA. Conventional, they gave you FHA. They want you to go 5% down or more, 3% down or 5% down. You want to have at least a 720 credit score. If you do, you should go conventional. All right. There might be reasons why you're not. Maybe a high debt to income ratio. But I'll know more live MU later. If you do, give us a call. Okay. 70K, single income in LA or Orange County. No debt in single family home. Pipe dream. 70K would be hard. LA, I would look at Palmdale. Right. James Johnson, look at Palmdale in LA County. So after 6 months, you can refill. Yes. Dude, after 6 months, you can refi. So after 6 months, you could use new value for rate and term refinancing. So if you bought a home and prices skyrocketed, right? After 6 months, you can use new value to remove your PMI, right? If you want to pull cash out, you got to wait 12 months. Hopefully that helps you out. If parents quit claim the deed, can I refi them off right away? Yes. Millennial money. Make sure you do it right so you inherit their property taxes. Don't do it wrong, because if you do it wrong, they're going to increase your property taxes, and then you have to fix it later on, which they give you 2 years to do. So make sure you do it right. If you need help, reach out. 714-790-9697. All right, Millennial Money. Let's do it right. So you make sure you inherit the taxes. I just got a huge promotion and almost double my salary. You got to wait 30 days. You can start the refinance process so you can lock in the low rate, Lisa, and wait 30 days till you get 2 paychecks to fund it. All right, Lisa, just start your refinance. Rates are low. Lock it in before rates go up. And then once you get your month pay stub, fund the loan. All right, but go to underwriting ASAP. Jan, Citibank or Naval Credit for jumbo loan. You got to go Citibank, Jan. Citibank right now, pound for pound, smoking everybody, right? I don't know where they're getting, how they're slinging the rates. If you're going jumbo, Citibank. I know my boys over at Loan Depot hate it when I say that, but they smoking everybody. You don't want that Citibank smoke right now, right? They're the only ones under 3% on jumbo. And they're like in the mid threes, twos. They're not even in the low, they're not even in the low threes or high twos. They're in like 2.625, 2.75 right now. Make sure you have good credit. You go at least 10, 15% down, right? Ramona, to be able to compete, is it okay to waive loan inspection, inspection, appraisal contingency? Lots of people are doing it. Ramona, pump your brakes, girl. Drive slow. Don't waive all 3. Waive 2 of the 3 contingencies, right? You want to hold on to at least the loan contingency or the appraisal contingency. Do not let go of all 3. 2 of the 3. Preserve that deposit, all right? Jose, what's the lowest down payment if I do jumbo? 10% down. And no, government is not helping if you're doing jumbo, Jose. I am sorry to tell you that. All right, guys. Hopefully, I brought you value. If I brought you value tonight, do me a huge favor. Wait, how long before you can do an Earl? You can do an Earl after 140 days. No, sorry, after 7 months. Sorry, I think about it. After 7 months, you can do an Earl. Okay, John? Let me see here. Rudy, purchase a home in September 2020, FHA, trying to get rid of PMI. Can I refinance now in conventional? Yes, you can. Definitely do it. Definitely do it. You don't have to wait a full year, Rudy. If you want help, give us a call, 714-790-9697. Also, guys, like I said, if I brought you value, if I answered the question tonight, please hit the save button, hit the share button, and then hit the like button. And if you're not following us by now, you made it this far, don't forget to subscribe. All right, guys. I think that's what's a jumbo loan? Monopoly, a jumbo loan is when you go over the conventional loan amount. All right. If you need more help, definitely reach out. All right, guys. We want to end all our episodes with our attitude is gratitude. Without you, there'd be no us. All right. Have a great night. One last